Hello, hello. Welcome to the 5TalentsPodcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the 5 Talents Podcast. We are super excited today. We have another amazing guest, Mr. Benjamin Kogut. Benjamin, thank you very much for joining, man. We appreciate it.
Abel, I'm glad to be here. Thanks for the honor.
Yeah, you're the man. I've seen you on LinkedIn a bunch, seen you in the social, space, and just every time I see something coming out of your platform, it's success after big deal after big deal. And I guess this year, we were just talking about it prior to the show during our pandemic COVID year. You came out. I think I originally saw you with some sharing positivity, it was a positivity hashtag and some kind of positivity challenge. And I go, oh, I need to follow this gentleman. Anybody that's pumping out some really good positive messages. And then I realized, oh, you're a commercial real estate investor also. So it was super awesome. But Benjamin, why don't you start? Tell us, give us a proper introduction, my friend. Tell us who you are, what you do, how you do it, and we'll just jump into a great conversation.
Well, I appreciate the positivity from you as well, Abel. I appreciate it. Yeah, so Ben Kogut, I'm here in Austin, Texas. I specialize in raising capital for commercial real estate syndications. I'm a partner in a company called HJH Investments. Our mission is to protect and then grow our investors' capital through acquisition of retail, office, and industrial properties around the U.S. And so what you'll see that's a little bit different from some of the multifamily projects that I'm sure you guys talk a lot about is that these commercial properties, what they typically have in common amongst the properties is that they have high credit tenants with long-term leases, and typically we're acquiring these assets around a 10 cap. And so that's a little bit more background. I've been a commercial real estate broker for about 15, 16 years. And I just,
wow.
Yeah. I got my CCIM, I got my MBA, went through all that process, and then decided it was time to give up the brokerage business just to focus exclusively on real estate syndication. And that's what I do now.
Yeah. Tired of finding other people good deals. So want to take down your own, right?
Yeah, absolutely.
That's awesome. So you were doing brokerage or brokering deals for a length of time. Tell us what you learned. Obviously, a lot of that insight and expertise, I'm sure, plays into what you do now. Maybe one or two nuggets that you took from that side of the house that you maybe still incorporate today.
I mean, it has always been and always will be about relationships first and foremost. Making sure that you're always a person of high integrity and it's very important for us that we do what we say we're going to do at all times. And so those issues, being knowledgeable about the market, luckily I have a passion for commercial real estate, and just like you, I enjoy being, reading about commercial real estate, talking about commercial real estate from night till, even if it means you and I being on a clubhouse group in the evening.
Yeah. I know.
Shop and just trying to help and educate people about the benefits of commercial real estate and syndication and investing and creating passive income and the tax benefits and all those other fun things.
Yeah, that's awesome. I agree. It's all about the relationships, and when you take your knowledge, education, and kind of helping others, it feels amazing, personally. And you the same way. I heard you on Clubhouse. If you guys aren't on it yet, be careful. It's highly addictive if you enjoy learning a lot and giving a lot. So it's kind of the platform set up pretty well. But anyways, Benjamin and I were, in a room and kind of going down some tax savings, tax strategies on commercial real estate investing. And I was like, man, this guy really knows his stuff, and excited to hear. So anyways, man, tell us about, your syndications. How many deals are you in? What $300 million of assets under management? What is that? How many deals are in the portfolio? Give us a trajectory. When did you start? How did it happen? Just let's dig into that, man. That's amazing.
Let's see. So the company was founded about 5 years ago. And since then, we have acquired over 53 properties.
You guys are moving.
Yeah, last year we bought about 85 or $86 million worth of assets during 2020, which our team raised $27 million of equity in order to acquire that much real estate. And our goal right now is to buy another $100 million worth of commercial real estate in 2021. And what we do is we have a process where we do research every day, looking at between 1,000 and 1,500 different opportunities every week. So it's a massive amount of deals, and we narrow that down based on, again, if it's retail, office, or industrial, if it has at least 30% of the tenancy is BBB credit or higher, with more than 5 years of lease term remaining upon the day of acquisition. So that means that on day one, we know that we have cash flow coming in because of that high credit tenant with a long-term lease. That's where our search starts. And out of that 1,500 deals that we look at every week, on average, we make about 16 offers a week on different assets around the country.
Wow.
And so out of 16, about 1 out of 16 offers we'll be able to put under contract. Typically, it's with a seller that's motivated enough to sell it to us at a 10 cap. And then 1 out of 3 of those that we put under contract will pass our very, very thorough due diligence process. So it's quite the funnel. And then once it's passed the due diligence process, then we go to our lending relationships. We put, market rate debt on it, somewhere in the 70, 75% LTV. And then it comes to me, I go and I visit the properties, and then I go out to our relationships that I have and talk to them about the project and what we see and why we like it, why we don't like it, completely transparent, and just kind of, give them an opportunity basically to become investors with us.
I knew I was going to learn a few things in this conversation, and I'm excited about a couple big ones: raising capital and this funnel. So there's this huge system and pipeline that you have in place to look at that many deals. Let's talk about that. So, and let me frame this for a second. Sorry. So 5 Talents Podcast, we really focus on commercial real estate investing. So we probably have 2 types of guests, at least 2. We have the passive investors, and then we also have active general partners, people that are doing deals just like us. And, that maybe they're on the first, second, third deal, and they're, learning a little bit more about the process. Right. So for the passive investors, Benjamin just described this massive funnel and a massive system, how to look at that many opportunities to figure out if, the deals that actually work. And the ones that work, those are the ones that gets done. You see an offering memorandum and you see the opportunity, and there you go. You can be an investor in this deal. But as a general partner, I'm super curious, like, how in the world, what kind of system do you guys have set up in place? Maybe you can describe that, a funnel, your traps that you've created, the system to look at that many properties and make an offer on that many deals.
Yeah, well, it starts with people, and we have an incredible acquisitions team. It's headed by John Post. He's in our office, and he's the best at it than anybody I know. He loves scouring all the different platforms. We get a lot of off market deals through relationships that we have with brokers, and really it's not rocket science. It really is. We know what we're looking for, and we're not afraid to make offers. So I would really encourage you and your audience, make offers. So we'll see things coming out in the market, and let's say it's in the 8 cap range or something like that, right? And so we'll make a 10 cap offer. That's the only way that it works for us, because we structure our deals historically where we pay out an 8% preferred return, and we pay that every month, starting on the first month. And the only way that we can do that is because we have bought it right. We bought it at that 10 cap range. We leverage it up to, somewhere in the 12, 14, 15% cash on cash range. And then that makes it so that we can distribute that cash flow. After that 8 pref is paid, then quarterly, we're going to do another bonus distribution on top of that, where we distribute 50% of the additional cash flow to the investors as well. So in general, historically, we're averaging somewhere between 10 and 10.5% cash on cash returns to our investors. And yeah, we pay it out. We have all the systems and software in place to make monthly distributions, and then quarterly distributions. When everything is normal, then the quarterly distributions come out as well. And at that point, we're going to provide everybody with a updated cash flow statement, balance sheet, and narrative on what the latest is with that property.
Yeah, so that makes perfect sense, right? You're going to see X amount of deals come across your plate, and you're going to backtrack or reverse engineer. If I know I need to have an 8 pref, I need to pay an investor starting immediately, then I better make sure that I can offer at a certain price. Sellers asking for X amount, like you said, a 8 cap, you're offering a 10, which gives you the ability to say you can hit those projections if they accept your offer. And I guess, still, I'm going to kind of come back to it. How do you even get that deal flow? How many brokers are sending you deals? How many websites are you looking at? How do you look at that many deals? How does that actually happen?
Yeah, so it's a blend of just about everything you can imagine. I mean, it's the LoopNet, the Coast, or that's kind of saying Crexy. Even when we got started, it was on Craigslist. Brokers bring us deals, getting on all the major brokerage houses email list, right? They're constantly flowing. Opportunities are coming to us, and John posts it on a daily basis, sifting through all of that, looking for something that fits in our box.
Yeah. And do you guys have a sorry, cut you off. Go ahead.
I was just gonna, if that is something that somebody want to dig in a little bit more on, we disclose this entire process. You can copy it. It's on our website, hjhinvestments.com. On the resources tab, we put together some YouTube videos. They're short videos, and we go through each and every part of the process, how we find deals, how we structure deals, so on and so forth. And it's out there.
Oh, that's cool. That's super cool, man. Thank you very much. I think that's good. I'll have to go check it out. And you look at, I would assume, multiple markets at that kind of volume. Which markets are you looking into, and are you buying?
So really anywhere in the United States, but the reality is in today's market, we're finding opportunities mostly in the Midwest. We have a lot of, we have a lot of relationships up there. Although we did just on December 31st, 2020, so a few weeks ago, we closed on a $20 million single tenant office building in Houston, not far from us. We have two deals here in Texas, but really like Indiana, Ohio, Michigan, Kansas, Missouri, that part of the country, sometimes secondary markets where we're able to find that same high quality, high credit tenants, maybe in harder to reach cities. And so we go that extra mile to go and visit those cities. Like I'm a road warrior all the time, for better or worse.
Sounds like it, man. Sounds like you're grinding.
Yeah. I mean, that's, I like that too. So luckily that's fun, but it is tiring and it is a grind, but we're here, trying to protect our investors' capital. And so that means that we have to, go above and beyond and make sure that we're, being as thorough as possible, doing our due diligence, as well as managing the assets along the way.
Yeah, that's awesome. Amazing, man. Well, kudos to you. You've done an amazing job thus far, and it sounds like you're not only going to get bigger and on a tear to continue to grow. So, great work, man. Great work. Hello, hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review and we're going to send you a free copy. So thank you so much for subscribing to the 5 Talents Podcast. We really appreciate it. So let's talk about this $27 million that you've raised. I know there's somebody on our Facebook page right now, either at least mine, that's scratching their heads and saying, it's so hard for me to even put one single family deal together. And I can't even find a 100K investor to do that. How in the world did you raise $27 million dollars worth of capital? And, let's just, break this down. This will be a fun conversation. How does that happen?
Right. So let's not beat a dead horse, but first it starts with relationships. It starts with educating people. It starts with taking people out to lunch and dinner and golf and all that stuff. So let's put that aside because that just is a given.
It's a given. Yeah.
Right. You got to do that. You have to do that. And it takes a long time. And when I got started, I swear, I put together a list of 50 people that, that I felt would be, high potential investors, some, family friends that I've known for forever that I know are wealthy, and some people I went to even middle school and elementary school. I have some elementary school friends that are investors with me, which is super cool. And just, start the conversation and say, hey, I intend on, buying this type of property. These are the types of returns that I'm going to be aiming for. And when I actually find it, would this be something that you'd be interested in investing in? Just kind of plant that seed. It's going to take about 7 interactions like that per person before somebody actually will jump in on average, right? So constantly, planting seeds is kind of how I think about it. Yeah. And then the people that you thought were going to definitely be the first ones in, they're probably not going to be your first investor. I don't know why that is. It's super frustrating. They're the ones that have, the most money, and, you kind of think, well, why not? Why won't they give it? I still don't even know the answer. It's those people that shock you and that they're yeah, I'll put 200 grand in your deal. And you're it's just, I don't know. But I'll tell you this, one of the biggest lessons that I've learned is that it's on me as a capital raiser to be indifferent. And what I mean by that is I don't care. I truly don't care whether you invest or not. And that way, when you have that mentality, it frees up any kind of I'm not here to push anybody into a deal. Truly, I'm not. I'm here to educate, to share what I think about the deal, what I've seen about the deal, why we're doing the deal, how, just whatever I can to educate. I'm an educator. Mm-hmm, right? Mm-hmm. And I'm blessed enough to bring opportunities to people. Mm-hmm. And whether it's something that works for them and their family at that point in time, that's up to them. It's not up to me. And so I have to be indifferent as to whether or not they invest. And that's something that I don't hear a lot of people talking about. And I'm telling you, if you can approach that in that way, it's a win. That's the winning mentality to have when you're trying to go out there and raise capital.
Yeah, that's awesome. It's a great mindset. So let me at least share for our listeners or passive listeners. I talk about this, I don't know, at least a few times, but it's worth bringing up, which is the way we are doing deals is and Benjamin's the same as the way we do deals, syndication. So we're basically pulling resources together, private equity, and buying something bigger than what we would have been able to buy on our own. And the SEC, Securities and Exchange Commission, gives us certain, rules to play by, but for the most part, Regulation D, 506B, 506C. Some people use Reg A, very few, but that it kind of all similar. We're pulling capital together, and as we're doing so, I think a question that I get a lot is, well, why isn't everyone doing this already? And I go, well, it's new. It's since 2012, the Jobs Act came out, 2012. I think it was Obama's administration. They passed it, and it opened up these opportunities for the everyday average investor to get in. Before, you couldn't advertise, so you have to know Ben, shake his hand, and kind of know him personally, or otherwise you would have never even known that people do this deal. And in 2012, they changed those rules. They said if you're an accredited investor, they'll let us advertise. And they start talking about these deals, and then they give an exemption also for non-accredited investors. And it just opens up these opportunities so much. Where kind of going back to your point, Ben, is, man, it's almost a little bit of indifference, and timing is everything. I'm just giving you an opportunity that you probably would never have seen had we not spoke about this. And that's the amazing part of the education and the indifference here. It's like, man, I'm just giving people an opportunity that you probably would have never seen without me.
Yeah, exactly. And it's not up to me to decide whether this is the best thing for you. And I don't know what your financial situation or family situation or whatever is like.
Mm-hmm.
So, because at the beginning, I took it personally, especially those people that I thought would be the low-hanging fruit that would definitely throw
Yeah.
money in. And they, for the most part, came around to it. They were like, yeah, let me see some deals. And then, we've got quite a track record now. And so like I've overcome that obstacle wholeheartedly. No one's like, oh, you haven't done enough deals yet. So
Yeah.
to an extent, like that's pretty beneficial to where we're at now. And that kind of that's a little bit like rocket fuel, like the velocity and momentum of people that are reaching out to me and saying, hey,
Yeah.
so and so said, hey, that they're having a good experience and they're getting all these monthly checks and stuff like that. Tell me about it. How do I get in on this stuff? And so then we have a system where we educate people. Partly it starts with those videos that I mentioned that are on our website, and now we're at the precipice of launching an ebook to kind of we haven't done any Google, Facebook, nothing like that. It's all just word of mouth and relationships and stuff like that. And so we're trying to get we're trying to up our game with that. And so I wrote an ebook, and we're not advertising deals, but we are sharing education
Yeah.
basically with people. And if they find that it's something that they would like to pursue, then we connect and we build a relationship, and then eventually we'll probably get them on our investor list and
Yeah.
so on and so forth.
I love it. I love it. Hence, you're on a podcast with me today, and I'm very appreciative that I caught you at a good time, so all of us can learn a little bit more about what you do and how you do it. So thank you for joining.
That's my
And
pleasure.
we did the exact same thing, man. It's been a good year to double down on this kind of stuff and the social part of it. But anyways, tell us what your ebook's about, man. So you said education. You're educating us on the process, on your process, or what's it
Yeah,
about?
we call it 5 things to consider when investing in real estate syndication. And so we go through what the goals and strategies are, and not that it's better or worse than multifamily, but there's just different, goals that you may compare to with multifamily or other types of syndications and investing. We go
All
through
right.
why this is a good play for diversification and how to diversify. We talk a little bit more in depth about the property criteria and why we buy the high credit tenants with the long-term leases, and the process that we go through. We talked about track record, and like it is important that whoever you're investing with has a track record of success to be able to execute upon the business plan. And then I talk a little bit of something that I learned about 10 years ago in business school that I thought was kind of fun, and it's based on a professor from Harvard named Bill Solomon. And let me tell you if you ever heard of this. He calls it the 4 rules of cash. Have you ever heard of the 4 rules of cash?
No, I'm excited.
Okay, all right. So these aren't mine; these are his. And they're like, yeah, duh. But sometimes the simple is best. All right. So rule number 1. All right, more cash is better than less cash. Okay.
Yes, absolutely.
Right. Rule number 2. Cash sooner is better than cash later. Right?
100.
Right? Like value, the time value of money. Less risky cash is better than more risky cash.
All right.
That makes sense.
Right.
And then rule number 4. Okay, you ready for it? This is never run out of cash.
These are really good rules. They're very straightforward, easy to understand, and there you go, man. That's awesome. Who wrote that book again, or where did you pick it
up? Bill Solomon, Sahlman. And so then we go into a little bit of depth, kind of talking through why you need to have these thoughts in mind. And like one example would be cash sooner is better than cash later. So in our deals, we have cash flow on day 1, so we are prepared to make distributions on month 1 and 2 and 3 and so on and so forth. Right, so you are going to get a higher cash on cash return versus other projects, which may you put money in, and then 3 years later you get a pop back out then, which is great. But they're just different business models. And so it's something to be thinking about. Hey, how does that impact the time value of money when I put money in now and I get money every month versus I put money in now and a year or 2 or 3 go by and then I get money back. So like it depends, like what are your goals? And so, a lot of people talk about internal rate of return, IRR, right? And so I have a little bit of beef with the idea of IRR because it assumes that what your exit is going to be in 3 years, 5 years, whatever your pro forma is. And the further you go out, the foggier that crystal ball gets, right? And so lots of times people are just pulling numbers out of their butt and saying, oh, this is, you put money in here, and this is what we project you're going to get out in 5 years. It's like, well, who knew what that, we'd be living through a pandemic right now. Who knows what's going to happen in 5 years, right? And so the metric that I prefer to focus on, especially I'm an investor too. I'm in a bunch of deals. I like to know what my cash on cash returns are. And so I don't want to go super in depth on that right here, but I would recommend any listeners get educated on what does it mean cash on cash? What is internal rate of return? What does a modified internal rate of return mean? So things like that. So being financially literate is extremely important as an investor in this business.
I 100% agree. Financial literacy is like something that unfortunately I didn't get taught in school. I don't know if you did, but no one showed me how to read a P&L. No one showed me how to read an income statement, a balance sheet. And, I don't know if I was not paying attention or something, but maybe I missed that completely when they taught us how to, evaluate the valuation of a business. It just never came. So what are some ways or insights or nuggets you can drop on somebody that's trying to become more financial literate? Any advice for somebody that's like, man, I'm really not very good with these pro formas and income statements, balance sheets, all that stuff.
So I also did not learn these things in college, and I went to the University of Texas, which I'm very proud of. But really, it
Yeah.
took about 8 years after that when I went to get my MBA here in Austin. I went to a program called
Yeah.
Acton, where I had the pleasure of learning it. And so, like, I don't know where you are, Mr. Mrs. Listener, on the spectrum of financial literacy, but the truth is it's out there, like everything you could ever want to learn is out there. And so whether you're a visual learner and you want to get on YouTube or you want to listen to some podcasts, I listen to a lot of podcasts. Most of them are like either self-help oriented or financial oriented or real estate oriented. um, and just you can reach out to me. I can provide you with some of the resources that we have to share with people, because that is what we specialize in, is educating people. And it's that's actually one of the really interesting things, Abel, is like until I started doing this raising capital and investor relations, like I didn't realize how much I enjoyed teaching. So that's been something that's new for me, being a teacher and educating and sort of helping people understand these types of things.
Yeah.
But I haven't really formalized it, and I'm just now at the precipice of launching that little ebook.
Yeah.
But yeah, maybe some more of that's coming soon.
All right, man. We're excited and keep it coming. We're recording like at the end of January here. So if this show comes out maybe end of February, your book will be kind of out there and somewhere around this time frame or a little afterwards.
Yeah, we have the ebook done, and so the strategy is we hired a third-party company to help us put together I don't know, to me it's sophisticated, but it's like we're using HubSpot, which is some software where, and full disclosure for anybody. So like you come and you sign up for the ebook, you put your email in, and then automatically you get a welcome. And then we have like a 5 email sequence where it's an education process, trying to give people more information, be top of mind.
Yeah.
And then
That's
always
very good.
inviting them to connect with me so that we can have a one-on-one, either in person or on Zoom or whatever. And so I see all the other syndicators doing that, and so I figure, well, what got us here won't get us there, so let's put that together. And so I think probably in February, March 2021, we should have all that set up, and
Right.
through our website, HJHinvestments.com, and download the ebook and get fully educated. And yeah, that's coming.
That's awesome. Well, we're here on the topic. If somebody wants to reach out, maybe, hey, they're interested in learning more about your investments, they want to play some capital with you, et cetera, what's the best place for them to reach out to you?
Yeah. So on the socials, easy, Instagram, LinkedIn. My name is spelled Ben, and then my last name is spelled Kogut, Kogut. It's Polish. I can thank my Polish ancestors for that unique last name. And then, of course, invest at hjhinvestments.com will get to me, and I'll be happy to connect with you and talk through what we have coming down the pipeline. And we always have properties coming down the pipeline. And something else that I'll sort of mention, Abel, is a couple of things that I've also learned. So we are structured in a way where if somebody had a 1031 exchange and they wanted to, exchange into a real passive income syndication project, we do structure those types of deals. Typically, it's through a tenant in common structure, also known as a TIC. We also happily work with people with self-directed IRAs, and of course, cash. As always, cash is king. Yeah. So,
do y'all do Regulation D 506B or C or both?
B. Yeah.
Okay, gotcha. Okay, yeah. No, so you have to have a pre-existing relationship with Ben to invest. So I would reach out to him if you're interested sooner than later. So if he has a deal in the future, you can actually invest.
Just also accredited, for better or worse, it's accredited investors only.
Yeah. Oh, so you do a B, but accredited only. Is that what you mean?
Yes.
Oh, okay, I gotcha. Okay, no problem. And then let's see here. Before you go, I know we have a couple more minutes, but it goes so quickly, man. I feel like we're just kind of just got the surface level. We'll have to have you back at one of our meetups that we do on a Wednesday. Um, is there anything we haven't talked about that you wanted to highlight or bring some extra exposure, or last bits of wisdom or insight you want to leave with any of our guests and audience?
Yeah, there are meaningful and significant tax advantages to being an investor in a real estate syndication. It starts with a cost segregation study, which, if you don't know what that is, super easy to Google. But basically, it's a third party company will come and dissect a property into different components. I'm not great at explaining that, but hopefully you can Google that and get educated about what a cost segregation study, which feeds into a depreciation schedule, and then it allows for us to pass through tax losses to our investors. And those tax losses are they're significant. They're wonderful, and hopefully that doesn't change in the near future. But basically, just wanted to kind of highlight that we do pass those paper tax losses through the K1s to all of our investors. And so definitely another topic of, it's like, not only are you as an investor going to get passive income cash flow and the appreciation from the upside on the sale, and you're going to get tax losses through the accelerated depreciation. And you don't have to do anything but sit back, and we ACH the distributions to your account every month. So, just grateful for the opportunity to help people, earn passive income. And, at the end of the day, our mission is to protect our investors' capital, first and foremost, by making sure that we are, making great acquisitions time and time again, and making sure that we take care of the assets throughout the process. So,
yeah. Oh, that's awesome. Yeah, I'm glad you mentioned that because if you don't know, accelerated depreciation, cost segregation, Google bonus depreciation in the first year, all those three terms go together, and they will absolutely change, what is your biggest expense in your lifetime is taxes. It's really not your mortgage. It's not your car payment. Groceries I'm sure are pretty high out there, but the biggest expense you're going to have for the rest of your life are taxes. And if you figure out that game, how to beat the tax man, then essentially you're going to have more money on the 4 rules of cash. I want more money sooner. I want it now, and I want to put it in another investment as quickly as possible. Right. So I love it. Thank you very much for sharing that. And this has been a really great interview, Ben. I'm very happy, man. Thank you very much for dropping the little bits of knowledge and nuggets on us, and appreciate it. I guess the last question too. What was your first deal, and how did you get into it?
The first deal, I bought some single family stuff along the way here in Austin. I lived in it and then moved out of it and just kind of rented it and cash flowed it. And as it's not a secret, everything in Austin's gone up in value. I will share a fun little story. So Corey, my business partner, he's the CEO. He founded this company, and I started out as an investor, and back in 2017. And the way that we started our business relationship was we were at a real estate investor conference, and in the evening they had a fun event called a cowboy auction. And the cowboy auction is when you bring non-monetary items to barter or exchange. So I had a diamond. Long story why I had it, but I had a diamond with me, and I didn't want the diamond anymore. And so I put it up for auction at the cowboy auction. I got 3 offers, and the offer that I took was Corey, the CEO of HJH. He said, "Hey, I'll take that diamond. In exchange, I'll give you some equity in this deal."
That's awesome.
And so I was like, well, that's interesting. I'd rather have, turn this non-monetary, non-cash flowing asset into a cash flowing asset. And so I took the deal. And so
that's how you met. That's how you met your partner today, huh?
That's how we started business. We had met briefly before that. Then we did that, and then we started talking for close to a year. And as the company was growing, he basically made me an offer I couldn't refuse to become a partner in the company and handle investor relations and the education and building relationships and now this marketing stuff and ebook and podcasts and all that kind of stuff. It frees up time for him to go out and run the company and do great deals.
That's awesome.
Yeah, so I have my dream job. I mean, I'm just blessed beyond words. And so that's a story about how I got into commercial real estate syndication.
There you go, bro. That's awesome. Well, thank you very much for sharing that. I'm glad I asked the last question, and what an amazing story, my friend. Sure. Again, my name is Abel Pacheco. I'm your host for the 5 Talents Podcast. If you heard something today that brought you some value, I would encourage you, go to our podcast, leave us a 5-star review and rating and a written review, and then also reach out to Ben as well. He'd love to help you. And he sounds like, man, he's the educator that you want to go talk to if you're interested in learning more about how your money's working. And then sure, he'd love to have you as an investor too. So thank you very much. We appreciate your time. Ben, thank you, brother.
Thanks, Abel. Appreciate it.
Okay. Thank you for listening to this episode of the 5 Talents Podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents Podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents Podcast. Live stream.